Hello traders, happy weekend to you all. This video is about the magic ABCD chart pattern. Okay, do not worry, there's nothing about magic here. Alright, okay, it's just a title, the magic ABCD chart pattern. Okay, what is the magic ABCD chart pattern? Okay, it's just a chart pattern. In theory, the distance from A, where I place my cursor here, to B, AB, okay, should be equal to the distance from C, right here, to D, okay. So distance from A to B should be equal in theory, okay. This is only the theory. Should be equal to the distance from C to D, okay. Usually this pattern is very reliable, where we see very often a reversal at the point now. It does not mean that whenever you see the ABCD chart pattern, you just place a trade anyhow, okay? I want to go a bit deeper into the theory of the ABCD chart pattern, okay? Before that, for those of you who are new to us, we are the TSTW 24 traders, and our website is www.stochastic-macd.com. According to the theory, okay, the distance from A to B, the price will go up, so we have uptrend first, okay, and then a retracement to either 61.8 or 78% Fibonacci retracement level. I repeat, the first condition is a price moving one direction, either up or down, and then a retracement up to 61.8 or 78.6% Fibonacci retracement level. These are the first two conditions for the chart pattern. So price going up, okay, and then retrace back down to 61.8 or 78.6% Fibonacci retracement level. If you want to master the subject of Fibonacci, you need to go to www.stochastic- not www.stochastic-macd.com, but you need to go instead to www.daypro, okay, to master the Fibonacci. Go to www.dayprotraders.com, okay. So for ABCD pattern, I'll repeat myself again. I'm doing it on purpose because I want traders to understand that the two conditions, price going one direction first, and then retrace back down to 61.8 or 78.6%, okay. So A, B, okay, and then retracement down to C in the region of 61.8 or 78.6%, and then from C the price continue the movement to D, okay. Because if the price, according to the theory, again, this is the theory, I like to separate the theory from the practical trading, because if you want to achieve consistent winning trade, you should be able to separate the theory from the reality of trading and keep your eyes on the price and understanding, okay, what is happening in the market at that particular time, applying, okay, the trading triangle. Because if you're just using the theory, okay, the trading is not a science, it's not a math. 1 + 1 is 2, and market is changing constantly. That's why we apply what we call the trading triangle: the market first, the sector, okay, before the individual financial instrument, attention on the leaders and the news, which can change the direction of the market at any time. Okay, we see traders sometimes they are so confident in their choices, and you'll see they will say to you, I use this work all the time, but nothing work all the time. Okay, very important. So you need to be flexible and understand how the market functions, what we call the stable data in the market. Every decision you are about to make, use it together with the stable data in the market. You may find what I'm saying now a bit blah blah blah, but it's a bit important. That's why I'm going round saying the same thing over and over. It may be annoying to you, but please accept my apology, but it's so important, okay. Now, so the theory says that retracement 61.8, 78.6, and then when the price, they say, according to the theory again, when you retrace up to 61.8, the D should be in the region, okay, of 161% Fibonacci projection zone. So the D for delta, okay, which is the last point of the C to D, okay. If the price retraced up to 61.8, the projection will be in the zone of 161% Fibonacci projection zone. Now, that's again the theory. The reality of the market can be completely different. The price can turn around at any valid resistance level and does not have to meet the target. And also, if the fundamental has changed, the price is not going to continue. Okay, the fundamental, the news and the leaders, these are the heart of the matter of the trading. As soon as the fundamental change or any news is affecting the market, the technical will just change completely. Okay, so do not use the technical like a science that it will go to 161% Fibonacci retracement level because you retrace to 61.8% Fibonacci retracement level. Okay, the next theory is that when you retrace up to 78.6, the price will go up to 127% Fibonacci projection zone. Again, that's again another theory. The theory, that's what we call the blah blah blah. Okay, you need to be aware of the theory. Okay, acknowledge the theory. Do not just disregard the theory. Know the theory. Okay, acknowledge the theory, but keep your eyes on the price itself, the number one indicator. Okay, the news and the fundamentals, very important. Okay, so this is the theory about the ABCD pattern: A, B, C, D. The retracement from B to C, according to the theory, should be either 61.8 or 78.6. The D section should be the projection of A to B in the zone of 1 to 7% for a retracement of 78.6% or 161.8% a Fibonacci projection zone for a retracement of 61.8% Fibonacci retracement level. Now, the 78.6% Fibonacci retracement level will bring the D to the zone of 1 to 7% Fibonacci projection zone. That's the theory. The reality of the market, I need to say this 100 times, can be completely different. Okay. Now, this is about the Australian dollar US dollar currency pair. We have the ABCD pattern. As you can see in this case, the price did not retrace to 61.8 and did not retrace to 78.6%. A messy market, isn't it? The price in fact retraced to 38, okay, 0.2% retracement level. Okay, 38.2. If the market is very bullish, if the fundamentals are quite strong, the price will not retrace below the 50% because traders are so bullish, the fundamentals are sound, everybody wants just to buy. The price does not have a chance to dip below the 50%, even to go to 61.8 or 78.6% Fibonacci retracement level to fulfill the theory. It stops at 38.2% right here in 10 direction. Okay, you see now, didn't go to 61.8, didn't go to 78.6, it stopped right here and continue the movement to the upside. Now the reality is speaking, you know, the reality is speaking. Okay, so the same thing, if the price going down, this is just the opposite. So price going down, we want it to retrace, to rally up to 61.8 or rally up to 78.6% Fibonacci retracement. That's for a downtrend. So price going down first. Here you see it went up. Instead of going up, we want it to go down, and then retracement 61.8 or 78.6 Fibonacci retracement level. That's the theory. And then the projection down, continuation to 1 to 7 or 161% Fibonacci projection zone for the downtrend. Okay, so we see now that this is 38.2 retracement according to the theory of the Fibonacci. Okay, if the price retrace up to 38.2, the projection should be in the zone of 161. Okay, 161.8% Fibonacci projection zone. That's again the theory. Okay, that's the theory. The price does not have to. Okay, All you need to do is just be aware of it. You can draw all the projection zone. That's what we say to trader. Draw all the projection zone. Draw the 1 to 7. Some people use 114%. Draw the 114 if you like that. Draw 114. Draw 1 to 7. Draw 150. Draw 161. Draw 176. Draw the 238. Draw the 261%. Draw the 300%. If you want, draw the 400%. Whichever projection is suitable for your greedy target. Okay. But how do you trade all this? All you need to do is to keep your eyes at the hot spot result. So price approaching one Fibonacci target zone. Attention. Where I place my right horizontal line, in fact I will draw a line there to show you this level here. Okay, this is the 1 to 7% Fibonacci projection level. Okay, that's where I'm drawing my line now. As you can see, traders who are using the ABCD pattern blindly, okay, even though the price retraced up to 38.2%, they decide to take profit at 1 to 7. There's nothing wrong with that. They take profit, they didn't lose. They take their profit. Some traders who are selling here, they are selling because of the theory, 1 to 7%. So they sell, they come, they start selling. Okay, they sold it, it went down. Okay, people took profit, they sold it again. So these sellers make some profit, unless they are stubborn traders, sellers. Okay, we did sell also in this zone that time, but as you can see, the price finally break that level. Okay, and continue the movement to the upside. Where are we now? Okay. Okay. The price, the 150 is at this level here, where I'm going to draw my horizontal line. I'm going to draw another horizontal line now in the zone of 10980. Okay, coming up. All right, just somewhere here, exactly where the price did stop, in the zone of 150. Okay, percent. 150% Fibonacci projection zone. A lot of traders do not use the 150, but I tell traders to pay attention to that level. That level seems to be very, very reliable, 150%, and also the crazy one, 176, 76% for the retracement, 76% instead of 78.6. Sometimes you may see 76% instead of 78.6. Or instead of 161%, you may see 176%. Okay, and sometimes instead of 161%, you may see 150. This is the 150 traders. You see, they strike the stop there, they take their profit at 150 instead of waiting for the 161% Fibonacci projection zone. These are smart traders. I don't blame them, because they know that everybody's waiting to take profit at 161%. Why should you wait and take your profit like everybody else? Why don't you take it early? You take the profit here. And sometimes traders are sleeping. Those who are sleeping will see some of their profit being wiped out, because they are so desperate for the price to go to the 161%. It must go there, it will get there, and the price didn't. It stopped there and turn around. Okay, now people are buying again. We will see. Talking about the Australian dollar, US dollar currency pair. This currency pair is perfectly overbought, but like I told you before, the fundamentals and the news will change the direction of the market at any point. So we are in the overbought zone, but if we have more bad news regarding the US economy, if you have excellent news for the Australian dollar, this currency pair will continue to go to the upside. Okay, the news can change the direction of the market at any point, but we are in the overbought zone. Okay, so this is about the magic ABCD pattern. Okay, the theory and the reality of the market. We are now in the zone of 150% Fibonacci projection zone. As I told you before, if you want to master the Fibonacci, you need to go to www.dayprotraders.com in order to master the Saggiat theory. Dealing with Fibonacci in general, one must be very flexible. Do not assume anything, but locate the hotspot trading zone and wait patiently for the price to turn around and give you a clear-cut signal. I hope you enjoyed this video also regarding the magic ABCD chart pattern, that you will put this magic ABCD pattern into practice in order to cream the market consistently. We are the TSTW 24 traders. Thank you for watching, and we will speak to you very soon.